Hello guys, good evening. Let me know how the audio is. Seems like it clicked off and on there for a minute, so I'm not sure what was going on with that. Give me a moment here, and we'll get right into the chart. How is everyone doing this evening? If you can hear me, if you could just let me know in chat, that way I know I'm not just talking to the wind. All right, good. Let me just check on everything's looking good. So, all right, we're going to get started here. We're going to look at Bitcoin. We're going to try and just push through and cover as much ground as we can this evening. I want to get into some Q&A stuff. I want to get into talking a little bit of strategy and technique and mindset and stuff, and we'll see how far we get, but that is my goal this evening. So we will see how it goes. Yeah, the chart isn't up yet, but I'm going to have it up in a minute. A little quiet. All right, let me see. All right, I raised the gain for you on the mic. Let me know if it still sounds a little quiet on your end, and I will try to adjust that for you. If there's any interference, whatever, let me know in the chat, and I will adjust that. All right. So this is what we're looking at for Bitcoin on the hour. Let's just go quickly and jump into the daily here. Give us the bigger picture here, what we're looking at. So most of you are probably looking at something similar to this on your charts. If you're in the course, then you're definitely probably looking at something similar to this on the daily. Once you break it down to the hourly, especially someone mentioned the sideways movement, that's where some of you are struggling to get clarity, and that's totally cool. It's one of those things that it takes time and getting used to, and it can be a little frustrating because it seems like it should be setting up for a buy or a sell, and you're like, it just keeps going sideways. So we'll try and discuss that a little bit more as well. All right, so on the daily here, this is the picture that we're looking at. We still have this pattern. Nothing's developed enough for me to change this yet, but we're given an opportunity to change. So if it does change, we will adapt our trend lines to fit that. That's very important. So descending nature still taking play. I do want to mention, so that we kind of get a better picture, better understanding of, I guess I should say clarity of the market again, is remember that this is the impulsive move. This is the corrective move. This is the impulsive move. This is the corrective move. This is the impulsive move. So this is just a correction. So keep that in mind as we go into what we're talking about this evening. We have impulse, correction, impulse, correction, impulse. This is the third impulse. If something is going to change in the market, if it's going to give us a bigger pattern or a different pattern, or it's going to shift or change directions, this is the time when it's most likely, the percentage, the chance is highest, okay? So keep that in mind as we go into this. When we talk about probabilities, possibilities, keep in mind that this is the point in the market where it's most likely if it's going to change directions or, whatever, give us a bigger pattern. But that being said, if it does, it's going to give us that pattern. It's going to let us know what's going on. All right, so the upward trend line you're mentioning that is acting as support that we haven't hit yet. I have this line in here and I have this line in here just so that if we get to that point, we can see what happens when we react to it. That's basically the reason I have them in there. Right now, they're meaningless. They don't add anything to the chart right now because we're not there yet. But they could. I just keep them in there in case it does happen. All right, so let's drop down here to the hourly and look at what's on the hourly. So on the hourly, we get a better picture. And in fact, there have been a lot of good opportunities in Bitcoin. I mean, in these corrective movements, which have been very corrective, we've had good positions. We talked about this before. There's been good impulsive moves, clear corrective moves, all the way down. And then you have areas like this, where there's not as much opportunity to really, bank the big bucks. But that doesn't mean that even in these areas you couldn't make a profit. It's just that this isn't as clear as this was. So there are times when the market gives us really clear pictures. There's a time when the market gives us really big opportunities. And then there's times where you have to work for it a little bit more. But even like this, you have your ascending channel, and an ascending channel within ascending channel, it works its way up here. And then if you look closer, you would find confirmation to get your entry. And that was a really nice sell. So when we get to where we are right today, I had this pattern here. I was setting up for the live stream earlier. And just before the live stream, not too long before the live stream started, we had this impulsive candle. What's interesting is that we were expecting this to break to the upside. I was expecting to break to the upside. The question you have to ask yourself is, with this pattern, I noticed a few of you were looking at the same pattern, which is great. It just shows that the method, it clicks, and once it clicks, you start to get it, which is really cool. I love seeing when you guys have the same stuff on your chart. So we're expecting that this would break to the upside, but you have to ask the question, based on looking left, based on what has been happening, are we expecting it to make big progress or maybe not so big of progress? Okay, so the question is, based on how it's playing out, based on the pattern, the size of the pattern, the size of the correction, are we expecting this to be a huge move or not? And the answer would be no. We're not expecting a huge move just off from this. If it's going to make a bigger move, we would expect to see a correction, a flag develop, and then it to move higher. That would be the best opportunity to get in. I just want to digress slightly from the chart to explain something that I think is important to some of you guys, because I know that I've seen in Slack, some of you have been asking this and talking about this. The probability of patterns to play out. And there is a probability factor for everything in charting, okay? So if you have, let's just look backwards here for a moment. So if you have a movement like this, okay? So we have this ascending within ascending, it breaks. We get down to the trend line, and then it creates this tiny flag. Now, it could have created a little bit bigger flag, but it didn't. It just dropped from there, which Bitcoin tends to do that. This flag here, what is the probability of this flag to play out versus, let's say, this flag? And we know, because we can see it, that actually didn't play out. But what is the probability? If you ask yourself questions like that, and I'm going to look and see if I can find another one. You know, you see a lot of times there are areas where it creates a flag-like pattern, but it, you know, these are bear flag type patterns, but they don't actually drop. It doesn't actually drop. So the point is that it isn't just about going to the chart and saying, okay, there's a bear flag, so I'm going to set an entry and I'm going to bank 10%. If it was that easy, then you'd have couch potatoes making millions. But trading's not that easy. It's simple, but it's not that easy. So you have to understand the probability of patterns. So I'm going to give you some tips, and pay attention to this. I know a lot of you are coming in the chat and you want to know what's Bitcoin doing. But what I'm teaching you, and this is free advice, but it's very powerful advice that is actually worth a lot of money. What I'm teaching you is how to make money from charting, how to make money from trading, and this is what you need to know yourself. So what we do is we look at the chart and we say, okay, one touch, we have two touches. We consider this a third touch, even though it broke through. We didn't make progress, and we would consider that to be not too relevant. We could basically say 5 touches. It's in my back testing, I found that usually you have 3 or 5 touches. So usually, if you get a 4th touch, usually you'll get a 5th touch. Not always, but usually. So usually 3 to 5 touches. 3 touches is a good confirmation point. So that's something that we talk about. So back to my question for you. So if we have an ascending channel like this, and then we have an ascending channel at the end, we've had 5 touches. We're expecting this to break. So the probability of this breaking here is higher than this pattern, which is higher than this pattern, which is higher than any pattern before, because as you progress, the pattern validates and it proves itself. So that's very important to really pay attention to. Could Bitcoin have dropped from here? It absolutely could have. Could it have dropped from here? It absolutely could have. But the probability is much lower. So it's understanding the probability of patterns to play out, but then it's understanding after the probability also, and we talk about this in the course, you know, the candle patterns that indicate reversal and stuff like that that really adds up. So you have multiple points of confirmation that give you a better advantage at really making a profit on your trades. So hopefully that was helpful. And precision, risk to reward is not worth it. A couple of you have talked about and asked questions about risk to reward and 1% risk. Make sure you hit me up with those questions in Q&A, and I will try to dig into that for you guys, because I think there's some powerful information that would be very helpful to you guys. So hit me up with those questions. Make sure you do not forget, because I may forget. Okay, so back to where we are in the chart for Bitcoin. So we had an ascending channel broke. We're expecting it to break. It breaks down to descending. Descending channel, it breaks the upside, and ascending channel. This breaks very impulsively, but it doesn't make much progress. As much progress, obviously, as from 8,000 to 6,000, it's not making as much progress. Then we get this ascending channel, but notice that the ascending channel are getting less and less steep. So we had this ascending channel was very steep. This one wasn't quite as steep, and this one's not quite as steep. So when you see something like that, you have to ask yourself the question, is the chart preparing to transition into another pattern, into something bigger or something different? It's something to pay attention to. How do you put a percentage on the probability that a particular bear flag will break down? Part of it is experience in charting, just putting the time in. But it's understanding if you're at a third touch on the top, third or fifth touch, but a third touch is usually, and it's developing a reversal pattern. That reversal pattern is just a much higher probability, sometimes up to 90% probability, as opposed to a second touch or even before a second touch on the trend line. It may only be 50 or 60 or 70% on the second touch. Now, you'll find throughout the charts that there are times where it goes on the second touch. It just goes. But when you're developing a corrective pattern like this, usually you're looking for that third touch. That being said, it doesn't always happen. So you have to keep an eye on all the factors because there's many factors that play into this. Okay, so looking at where we are right now, there is a possibility that this is going to retrace. And if it does, then we'll adapt the pattern to fit that. The other options are if we develop a flag pattern. That would be the nicest situation if that does happen. We can look into getting the flag to move to the upside. There is something that you should pay attention to, though, and that is that we broke the previous high here. I'm going to ignore this for now because that's a huge wick. But we broke that previous high. Barely broke it, but we broke it. And people see that as resistance. So I guess I shouldn't say we broke it. I should say we bounced off from it. So we bounced off from that. Now, what happens now? You have the crowd mentality that it was resistance and we bounced off from it. If we get that flag pattern, that'd be a perfect opportunity to break through. And if we break through that, it could be very impulsive. So that'd be something to look at. The other thing that's possible is if we get that corrective movement to the upside like this. Basically the same thing as that happened here. And you might be asking, well, ascending corrective pattern, why didn't this break to the downside? And the reason why it didn't break to the downside is we have 1, 2, 3 touches. We have 1, 2, 3, and this would be the 4th touch. And this bigger pattern, the bigger descending pattern played out. So the override is the bigger pattern. So within the bigger pattern, you might have a smaller pattern like this that would normally be a sell. And this could have totally turned into a sell. But we have to understand that the bigger pattern can play out. That's the override. The bigger pattern can play out. And that's what happened here. And as you get more experience trading, you get better at catching these and understanding, okay, the probability is just higher that we're going to see this break to the upside. Now, what happens once it breaks to the upside, we leave up to the chart. And that's where, waiting for those flags and those continuation patterns to tell us what's going to happen. If we get a nice continuation pattern, I'm going to be totally in on that. Tone Vase says that we're going to 3,000. Is that possible? It is something we talked about before. It is possible. I mean, if you think about it last year, the beginning of last year, Bitcoin was under $1,000. Okay. And less than a year ago, it was like, I believe, $3,000. So we've had significant growth in Bitcoin price in a year's time. To see it drop back down and retest lower levels is not on, out of the charts. The other thing that I want to talk about is I want to talk a little bit about Bitfinex and some things too as well. But so this is a smaller pattern within this bigger pattern. So That broke to the upside, but we may not get a lot of movement off from that. So what we have to understand is what's the most likely thing to pan out for Bitcoin? What is the most likely scenario? And what we can do is we can just try to place, a trend lines and get an idea if there's areas that, the chart is respecting. So we have 2 touches. This could be invalidated, but there's nothing wrong with having that in there and seeing if it reacts out from that point. I'd be careful about putting too many trend lines on the chart that confuse you, and I'd be careful about being attached to the trend lines. But it's okay to just draw a trend line and see if it fits, and then you can always delete it. So you can look at that as a possibility. Also, you can do something like this as well. I'm going to ignore that this bottom wick unless we break back down through. It's something I do a lot more on Bitcoin than I do with Forex, just because you have a lot of these wicks. Like, for instance, this, I completely ignored this area because it doesn't add value, and it was obviously, in my opinion, probably manipulation. So you can see something like this. The other thing I wanted to mention is you can have a pattern like this. So corrective movement breaks to the upside, and what is stopping it to correctively move down? And then you could break to the upside again. And what has happened? Really nothing. We haven't made progression. So this could continue as an ascending within ascending. It really depends on what happens after you break. So we did have that impulsive move, but we need time to see what's going to play out from here. So we need. I guess my point is, I wouldn't be placing a trade to just enter the market right now. If you're not in, now would be not the good time to get in. We could drop it down to the 15-minute and see what is going on. Right now, it looks like the possibility of a flag, but we need clarity. So we would still need time to determine if it's making a continuation or if it's actually going to reverse. And a lot of times, the issue is that a lot of these impulsive moves, here's the thing. I mean, we talk about manipulation in the market, and we know that Tether is involved. We know that Bitfinex is involved. We know BitMEX is involved in these manipulated moves. But we also know that markets move in patterns, and you need real people to be putting money into the market for manipulators to make money off from it. Okay? So that's why these patterns still play out, because the market still moves in a specific way. So you could even say, like, moves like this. Maybe moves like this are 75, 80, maybe 90% manipulation. It's totally possible. I'm not sure what percentage would be manipulation. But we do know that there's a lot of fake money with Tether. That being said, the patterns are still playing out. So it's just understanding, okay, we got up to here. We're going to see a large retrace if a lot of this is fake money, because the purpose is for them to pump the market and then sell to make a profit. So even though the market may be moving to the upside, you might retrace half of it because of that. Strong resistance. There's a lot of wicks on the bottom too. So I wouldn't just say it was strong resistance. I would just say that the wicks, I mean, a lot of people will see wicks as indecision. But again, part of it is just people buying and selling for profit. And, obviously you have the exchanges which are doing that and trying to make a profit as well. And that's the thing too, is that we have room. We have a second touch, so we have room. So let me again just put this trend line in here to give us a little bit more clarity here. Okay, so we could look at this last part here. Okay, So this last part as a descending channel. So a descending channel within a ascending channel. So the nature of this last area is mostly descending. So to see this break to the upside, whether it's impulsively or correctively, to either test this trend line or test a little bit below it, or to test this previous high or this previous high, would not be unheard of. That would not be unheard of. So those are possibilities. And if it did, then we'd get that third touch, and then we'd probably see the sell. If we do see the sell, we'd be retesting the 6,000 area again. It'd be interesting to see what happens when that takes place. That's a possibility. The other possibility is that we just come up here to test this trend line, which would then validate it. It's not validated yet. And then we'd get a corrective move, which would tell us whether we are going to continue up or drop lower. Do you see the impulse on the 4th of October as the last real impulse, or do you consider $80 pumps upside as significant impulses too? How big does a candle have to be? It's not always the size of the candle. I guess it's the size would be in relation to the corrective movements. So this candle right here, it's impulsive compared to this area, but not really compared to other candles we've seen. And it really just takes us to a double top area here. I can put that in so it'll give you a little more clarity. So we could just bang around in this area and we may not make any progression. So again, we need confirmation of where it's headed. So it's not so much how big the candle is, it's to see the continuation, to see it actually continue to move or form that continuation pattern to let us know that it will continue. So, yeah, so that's kind of what, there is a lot of, this whole area, I know it's been frustrating for a lot of people. Because people want to see, I mean, like, this is what you want to see. I mean, that's just nice to trade. But it doesn't happen all the time. And if it did, Bitcoin would be what? $5? You know, you aren't going to see that all the time. You got to have time for the market to correct into its thing. But continue to, as you know, over the next week, as we get these hourly, continue to watch this pattern and see what develops. Even if this could continue, this completely retraces and it just corrects downward, that's actually more of a positive sign, in my opinion, that we'd see this move upward than if we were to move up from here. I would see that as a better sign. And the reason being is it gives more clarity, and it's just a correction off from this impulse to break out of this descending area. Then we'd be looking to retouch this trend line and then get that sell and go from there. But the market doesn't always give us those picture perfect. That's why we have to be open and as it develops. That's why, let me draw this out here a little better. So you could look at this pattern here and you could have been looking at something like this. Just to give you an idea. So something like that, it looks like it's going to break to the upside. Not saying that's not valid. I mean, you could tidy up the trend lines a little bit, but I'm just giving you an idea. I'm not saying that's not valid, but sometimes you have to look at the last little bit and get clarity from that. Is it reacting to this last area? So that gives you, this is your entry area. The last area would be your entry area. So and the last thing I want to mention on Bitcoin here. Let's go back to the daily. So again, the daily is a descending channel. So ultimately, we'd be looking for Bitcoin to move to the upside. Ignoring, what people call FUD and all that. We'd be looking to move to the upside. That being said, we have to understand that it is most likely going to come back down and retest either this area as a trend line or come back down and test our longer term trend line, which is here. So that's the most likely thing to happen. We're definitely going to be retesting this area of 6,100. I do not anticipate anything different. And the reason is we had the impulsive movement. This is just correction. And we aren't getting any picture telling us that it isn't. So I'm still expecting this, whether we move back up to, around 6,900 to 7,000, maybe a little higher, something like that. I'm still anticipating this coming back down to 61, somewhere around that area to retest. That just makes sense to me. The only way I would not see that happening is maybe if we get more of a corrective descending nature, and we'd still end up testing that area pretty close to it anyways, and then we could maybe potentially move to the upside. But again, if we look at the nature of the market, impulse, correction, impulse, correction, impulse, this is just correction, and then we're looking for that next impulse. Because this correction is not as dramatic, we may not get a huge sell. It might just go down to 6,100. It might just go a little lower. Who knows? But I would anticipate still seeing a sell eventually here before we move much higher with Bitcoin. And the other thing is, as Robert mentioned in chat, the volume is really low. Let me just pop this on the chart here. Okay, so we look at the volume. The volume is, there's a lot of, if you look at, there's somebody on TradingView, I forgot their name, not TradingView, on Twitter, and they had a Excel that was propagated based on data from APIs, and they were looking at the percentage of tether trading, which they were considering fake trading, fake money, to real, and that has increased exponentially. But people will often say that this is smart money. If this was smart money, we'd be moving up. Okay. Smart money doesn't just buy in and then Bitcoin doesn't move. So it isn't smart money. It's the same money. It's the same fake money just being moved around. Most likely money laundering is what they're doing with it. So the actual volume levels are dropping off here. You'll notice they are dropping off even with manipulation. They're dropping off, okay? And then you'll see these spikes that do happen, but, volume is low. The long short tool, I will talk about that in a little bit. I want to spend some time on that, so remind me about that again. We will get into that. S-Bolt Zone, glad to hear you made some money on that impulse. That's awesome. That is awesome. Glad to hear that. Just see if there's any other questions here on Bitcoin. Okay, what we're going to do is we're going to we kind of covered Bitcoin. We can come back to it and talk about it if we have time. If you have questions about Bitcoin, we can do that in a little bit. What I want to do right now is I want to talk about I'll go over Ethereum and XRP quickly, and then I'm going to jump into Forex because we've had a lot of requests for that. So I'm going to get rid of volume because it annoys me. All right. So for Ethereum, a little different picture. We're seeing a long extended correction instead of multiple corrections as Bitcoin has given us. As we look at this end here, it does appear that we have broken out, but if you notice, the break is not confirmed yet. So we have to look at the possibility, again, like Bitcoin, that it will retrace fully. So we would look at something like this. It's a descending channel within a descending channel. The probability of this playing out is really high. We have 1, 2, 3, 4 touches, and then we could have put a trend line on the top as well, but we don't need it. So the probability of that playing out was high. It's just what it does from here. We have to wait to get clarity from the market, because you can have a pattern that breaks as it's supposed to, and then it reverses and goes against you. And one of the reasons, and this is something we're going to add a video into the course about, one of the reasons is because often it is catching people on the wrong side of the market. So for instance, we have this double top area. All right. It would not be unlikely for it to break that top or come near that top and then retrace and then move back down. So that's a possibility. It's something you have to look at as a possibility. We're seeing that happen more and more and more in the markets. And the reason is because people are getting so attached to resistance and support areas that they see something in pulse, and as soon as it breaks that last high, they're like, we're in the clear. And you have a bunch of people buying in. They're just buying in. And as soon as that turns around, because the market's not going that direction, all these longs got to go short. So it just pushes everything very climactic and impulsively the other direction. This doesn't always happen. You're not going to see it happen every single time, but it's happening more and more often. And it's when you pay attention to this is at the break of a pattern where you have those third touches. So just these little tips that we give you, it just gives you clarity to the market. But Ethereum has been playing out fairly well. The gains have been decent. The patterns have played out really well. And we're just kind of mimicking this area here. So to see this come back down again is possible. Again, we have to wait and see get clarity if this develops a continuation pattern. So that's Ethereum. Ethereum's mimicking Bitcoin right now as far as the break is concerned. So if Bitcoin drops, Ethereum will follow it. So Ripple is interesting. Ripple's probably, I don't want to say one of the easiest to trade, but it's definitely got some good patterns. So descending channel, we had that break basically on the 18th. So what's interesting with Ripple is that we had this break of the pattern before Bitcoin even came to it, which is interesting. So we had that break, and this is what we're talking about. So we had this continuation pattern, and then this continuation pattern. So good areas to scale in. This movement up, if you didn't get in on this movement, I mean, I can understand not catching this, but if you saw this continuation pattern, you should have got in on that. So this gives me a good opportunity to jump into discussing the long and short tool. So give me a moment to discuss that. We will come back to Forex, so just bear with me, but this is a good opportunity to do that. So to do that, let's put in some trend lines. What we can do is something like this and like that. Okay. So the question that people often ask is, first of all, where do I put my entries? And, what is the confirmation? So we talk about 3 touches for bigger patterns. We don't always get 3 touches for our continuation patterns. Sometimes you're just going to get 2. But as it happens, we do have 1, 2, 3. So we have 3 touches, which makes the probability of this playing out much higher. Not only do we have 3 touches, but we have this very impulsive bearish candle, and then it completely retraces. Okay? So you could get in right after this hourly closes, because this could just have went from here. That is totally a valid move. If you were a little skittish, a little more conservative, and you waited, and you see this tight, corrective, low momentum, you definitely should have got in on that, because correction within a correction, very high probability of that playing out. So we could either got in on that. Let's just let me see my stuff here. There it is. All right, so we take our long tool, and let's say that we got in at the top of this bullish candle. So we saw the complete retrace, and we're like, third touch, we're going to get in, okay? So first of all, we have our long tool. What we're going to do is we're going to go to settings and account size, okay? So this is your account size. Whatever your account size, this does not have a correlation to the actual buy and sell trading panel, okay? So what you set here will not affect how much money you have in your account or anything. You have to set this. It's just basically a gauge, okay? So they are different. That is important to understand. So let's say that we have a $1,000 account and we are going to do a 1% risk. So we're risking $100, okay? What we like to do is we like to keep our stops around 20 to 35 pips. You don't want to go any lower than 20 because you're going to get stopped out. The wicks are just going to kill you. So what you can do is you can look at the wicks here and say, well, I want to kind of cover that area. If we were to get into that position, we would move around here a little bit, but it would stay right around break even, and then we get that impulsive move and we'd be in the clear. Once we get this impulsive move and it starts to form this correction, that would be the time to move it to break even, okay? Just in case you get that long wick and it just knocks you out. You don't want to take 1% loss when you are in profit. So to this area right here, it's almost 2% profit just to there. And how long did that take? That took, well, if we got in here, it'd be, let's see, 3, 6, 9, 12, 15, 18, all right, 24. It'd be a day and a half, okay? If we got in here, it'd be a day and a half, you'd be in 2% profit. It's not bad, considering that people think that 2% interest, annual interest, is good. You could have got that in a day and a half. That's not bad. If we had waited till up here, that's 4.7%. Now, some people would take profit here because they would see complete retrace and they might get a little scared and skittish. That's okay. Everyone has their own risk tolerance and what you want to give back to the market. If you had stayed in, let's say you most likely would have got out on this bearish candle. So probably 10%. Or you could have stayed in until you got a clear signal that we were heading back down. But that's between 2 and 10% profit on a move that's going to happen over a period of 1 to 4 days. You know, that's not bad. It's actually more like, 3 days, 2 to 3 days. So that's really, really good. That's how you would use the long or short term. Doesn't matter. They act the same. It's just one is short and one is long. So they act exactly the same. I just want to make sure that. Hold on a second. I want to check something. All right, so just needed to check something quick. So I'm back. All right, so as far as going from the tool to order entry on CoinG, how do I track profit or loss? It's a good question. I did use CoinG for a while earlier in the year, and back when alts were really going on fire, it was like the tool to use. It was like they had APIs that worked with all the exchanges, and TradingView just wasn't working with all these alts. Now the alts are pretty much dead. Coinigy really doesn't serve, in my opinion, as much of a purpose. Obviously, it still does have access to the APIs for alts that TradingView doesn't. So if you still trade those, yeah, then you'll definitely need it. But TradingView has XRP and Ethereum and Litecoin and Bitcoin, all these. So if it's possible, trade from TradingView, I would recommend. And the reason being is because it's just much more clear. Coinigy has more glitches as far as what I've seen in the past, and TradingView just seems to work more fluidly and make more sense. Okay. I will talk a little bit more on the long and short tool. So we'll look at I'm going to get into Forex here in a moment, and then we'll do it on Forex as well. So you can get an idea. I just want to show you that because I know a lot of people, they're like, well, where's the profit? I can't really make much profit. Well, this is decent profit. And could this have went down? This could have went short instead of long. It could have. But the chances were really low. So this was a high probability trade. Even if you had just got in for 8%, 8% on $1,000 account. Okay, that's only $80. But 8% on a $100,000 account, see, that's the difference. If you can learn consistency, you can learn to trade the market now with $100 or $1,000 or whatever you have, a small amount. It may only be a small profit here and there. 10% of $100 is only $10. Who cares? But 10% of $100,000 is $10,000. So it's the consistency. Do not worry about profit. Profit means nothing. I mean, the amount of money means nothing. What matters is getting consistent, because if you can consistently make 10% with a low account, you can consistently make 10% with a high account. And I have to stress that because people get so worried. They're like, it's only $100. I'm never going to make a bunch of money. Well, you know what? If you take $100 and you make 10% a month on $100, do you realize that in 10 years you would be a multimillionaire on $100? So the issue is not the amount of money you have to put into the market. That will never be an issue to you. There will never be a hindrance or stumbling block to you making a profit. The only hindrance will be is how much time are you willing to put into charting. You're going to have to put in the time and the effort. You're going to have to really focus. But the money means nothing, trust me. It means absolutely nothing. Sure, it's going to be a lot quicker if you have a lot of money, but a lot of people have dumped in too much money before they've learned, and they've lost money. So, 2% a day, it's not going to happen every day. But you're going to have a 2% day, you're going to have an 8% day, you're going to have a break-even day. It's what matters is what happens, the months and the quarters and the year. I might take a break-even for a whole week, but my month might be, 35%. It doesn't matter to me because my goal is to be consistent. And if after the end of the quarter, I find, that I'm up 200 or 300%, I'm not going to look back and say, that week I didn't really make anything, that, beat myself up. It doesn't matter. All right. So again, I know that we kind of get into rants here a little bit, but these are the things that are going to really save your hide. This is what's you're going to look back in, 2 years. And you're going to be like, that little tidbit, that little tip, that really saved my hide here. That really made a difference. So, yeah, don't get caught up in, trying to make a certain percentage. Just get focused on the consistency. So, all right. So a lot of good opportunities, or there was some good opportunities here. Now on Ripple, I'm looking at this. We're reacting to this area. It'd be interesting to see what happens there. Basically, within the next couple hours, we should get an indication. If this is going to move further to the upside, breaking here would be totally a possibility. But it does look like it is developing a bigger flag pattern. So it's important that we stay a little bit neutral with where Ripple's at, understanding that this pattern could break to the upside and be ready for that. And if possible, get in on that. Totally going to be for that. If you were going to get into this pattern, I would have preferred that you get in down here. All right. The reason being is you have, technically it's only 2 touches right now, but you had the reaction off from what we're assuming. It doesn't confirm trend line, but we're assuming is a trend line. You have that retracement, and then it goes into a correction. Placing a trade in this area would allow you, let me just show you. All right, so let's say we got in right here because that was a retrace candle. All right, we go down here. That right there is still 2%. Now, it's possible that you would get tagged in and tagged out, so we might want to pull that down a little further. That's 1.58%. The important thing here is not that we could get 1.58%, because you might want to make the stop a little bigger just in case it continues down. It would be a 1-to-1. That's not a trade you would take. A 1-to-1 trade is not a trade you would take. For 1%, you wouldn't take that. However, the override would be the possibility of it breaking to the upside. And the reason is that if this does come back down, I can move my stop to break even. And I'm just going to be taken out for a break even. So I'm not going to lose, but it has a possibility of moving to the upside. And if it does move to the upside, there's a 90% chance it's going to move to this high, which means that there's about 7.5% in that move. So for that possibility, I'm willing to take a trade like this because it gives me the cushion of being able to take that stop that's going to just take me out for break even, and I'm not going to take a loss on it, but for the possibility of 8%. Otherwise, I wouldn't take this trade because you don't do a 1-to-1 trade. A 1% trade isn't worth it. But for that greater profit, it's worth taking that chance. So that's XRP. That's something to look forward to. That's something to look to. This would be the trade you should have taken. If you didn't get on that, wait. And if it develops another pattern like that here, you could look to take that. Keep in mind, if it does, that could still be a bear flag. This could come back down to here. And then we could get that correction and move to the upside. So it's understanding that, yeah, that's a descending channel within a descending channel. But is this bigger pattern going to play out? Is this going to override? Could happen. All right, so just being neutral as possible, understanding all the nuances and possibilities. The reason why this has the possibility of still playing out to the upside is because you'd have 1, 2, third, that'd be 4th touch. You could count that'd be 5 touches. So that'd be a reason to look to that. All right, I want to jump into a little bit of Forex. We're going to come back to the long and short tool. I will discuss that a little bit more. We'll look at it on some Forex pairs as well. But a lot of people have been asking, so we want to talk about Forex. All right. So, Ripple's cripple. Yeah, I probably wouldn't push my boss off the roof. You'd be in jail and you wouldn't be able to trade from jail, but I understand the feeling, I really do. So, all right. So, if you guys are asking questions and I don't get to them all, you can re-ask them in Q&A. I will try to address them then. So what we're looking at, let's look at the daily here, get a little bit more clarity on the DXY. So for the DXY, we were looking at the possibility of this being a impulsive movement, even though there's quite a bit of correction in it. We were looking at that being the corrective move and this being the bear flag to move to the downside. We're still looking at that as one of the possibilities for the DXY, but it's developed this much larger pattern that it's going to take time for this to play out. So while this plays out, we're looking at the lower time frames. Basically, the question was asked for the DXY, why does it affect the Euro USD pair? And that's a very good question. One of the reasons why the DXY and the Euro USD pair are so closely correlated, in fact, Euro USD is often an inverse of DXY. So they pretty much move opposite of each other. And the reason is that the DXY is not the actual, you'd think the DXY is the US dollar. So it's like what the US dollar is worth, but it's actually not what the US dollar is worth. It's a compilation, or it's the values of multiple currency. Trying to think of a better way to explain it. That doesn't, but about 60%, so over 50% of the DXY, what you could say moves the DXY, is the euro. So the euro heavily influences the DXY. So that's really important. You can look this up. You can go on Google and just look up DXY, and you can go to, no, that's not what I want to do over here. DXY Wikipedia. I'm pretty sure it is on Wikipedia. I just want to make sure. Yeah. So it's right now it's 57% weight is the euro. 13% is the Japanese yen. That's why you will see USD yen will react as well. The other pairs, they don't have as big of a correlation. Obviously, DXY will affect them, but it doesn't have as big a correlation. Pound sterling is 11%, which is the British pound. Canadian dollar is 9%. Swedish krona is 4%. And Swiss franc is 3.6% weight. So that's what affects the DXY. So it gives you a better idea of what is going on, goes into the DXY. It's not just the value of the dollar, which is kind of interesting if you think about it. Yeah, you can ask questions about Forex for sure. Be happy to answer those. All right, so I got a little sidetracked there. So this is a good lesson here to look at on the chart for DXY. Obviously, we don't trade the DXY, but it's going to influence our decision on Euro USD. We've broken out of our trend line. Now, the question we have to ask is how have we broken out of it? And while we did have that very impulsive move, we fully retraced and we're just getting that corrective movement. So the question is this going to correct along the trend line and still drop? Or should we adapt our trend line, and is something like this more applicable? Okay. So if we move the trend line to here, has the pattern changed? No, the pattern hasn't changed whatsoever. It's still an ascending channel. We're still looking for that sell. So does this fit better? Or does that fit better? All right. So we're looking at the most recent price action. Let me tighten this up a little bit. That looks like something that we should be considering. Now, if this suddenly just breaks from here, it would be reacting to that trend line. But we'd be looking at this to correct a little bit more, and all we need is a couple more hours, and there would be the possibility for that to definitely break. However, again, we've had basically 3 touches. This one didn't quite make it. But it's a possibility that we could see this move correctively to the upside and either retest this pattern or this line for a double top, or just break it to, again, catch people on the wrong side of the market to get that big sell. If that happens, that's going to be a terrific move, is you could get in there with, let's see here, probably a 30 pip stop loss, maybe even less, and you have almost 2% to the bottom of this trend line, and then almost 10% in that move. Now, again, we're not trading the DXY, but it just gives you kind of an idea of the possibilities. So that's what we should be looking at. Staying a little bit neutral here, but that's something to look for. Also, the possibility for this to move to the upside for one more touch here to form just a bear flag and then continue down. So if you look at all these possibilities, as they develop, you can be ready for each one. Okay, so you won't be caught on the wrong side. Let's take a look at Euro USD. Again, we're looking at pretty much the inverse here. So pretty much what I said for the DXY is applicable to Euro USD, only on the flip side. So are we going to see this correct along the trend line and then move to the upside? Or are we going to see this move down to retest this trend line? It could be even a double bottom, or just test the trend line and then move to the upside. That is pretty much what we're looking at. Again, this is corrective, so we could get that impulse out of it to fulfill the pattern. If we did, we could even break down, and we would still, my drawing's horrible, but we'd still have the same pattern. It'd still be the descending channel, and then we'd still be looking this to move to the upside. The important point here is the farther it goes down, the bigger the move, the possibility for the move up. So it's something to look for. On the higher time frame for the Euro USD, so we have obviously very impulsive movement. This is developing out. If we see this continue to develop out, we could be seeing this move further down is a possibility. Just keeping all our options on the table. But we still, I believe, have more development to take place on Euro USD. That's why we're focusing on what this pattern is doing. That's where we're going to get our trades here coming up in this week. To go in with use. All right. I wouldn't base too much on the news because you'll get carried away with a bunch of nonsense. The news lies. The news has old information, has bad information. Sometimes it's good information. Sometimes it's legit. There's one of the most popular. I'm not going to mention who it is, but there's one of the most popular Forex trading service sites. It's trading signal site, something like that, whatever you want to call it. One of the top guys on there, I think he's a lunatic, but he sits at a computer all day long watching the news, frequently having 10, 20% losses in running losses. And he says sometimes he'll have losses for months. Just ridiculous nonsense. And that's people that trade on the news often have that type of strategy, and it's ridiculous. But let's talk about. So let's use the short tool here. Let's pretend like we're placing a position for the short tool, and I'll just show you how it works for positions. So let's zoom in so we can see this a little bit better. So we had this break of this ascending pattern. We had a correction. So we could have got in on that correction. Let's say we missed that correction for whatever. Let's actually use that one. I was going to use the next one. Let's use this one because it actually has a good reason to use it. So we have about 5 hours here, or 6 hours, which we want to look at. We want, for a corrective movement, we want to see at least 6 hours for it to develop. So we have those 6 hours. We have this very bearish, or very bullish, and then a bearish retrace. We could get in on that, and we could have a stop of about, I would do 30, just in case it wicks. There's always the possibility for something like this. That's why I was going to use this one, but there's always the possibility for when we just break out of a pattern for it to move back up to that pattern. So we could get stopped out still, even with 30. But there's the possibility of this working out. It's a nice tight flag. We have that retrace candle, 6 hours. It looks really good. So we would take that. To this correction is 2%. There's no reason to get out there. So we would get down to this area. That'd be 4%. At this point, you might, as it's retracing, you would lose, 1.5% there. And you might want to get out. If you had stayed in it, you could get about 8% down to the bottom here. So that's the possibility there. Now I'm going to explain to you some of the nuances here. So right here, the number 30 is the pips size of your stop. So as you adjust this, that's the pip size. All right. So that is just the amount of, so pip is a movement in Forex. Okay. So it represents a movement in price in Forex, or Bitcoin too as well, but anything you're trading. So that's a 30, that's the size of the move. But the amount, no matter where I move this, it's still only 1% because I've set it at 1%. The only thing that changes is as I move this up, you'll notice that my profit percentage changes, okay? So if I had this really tight, I could have 11% profit down here, okay? But the possibility of getting stopped out by a wick is extremely high. So it's a trade-off. So that's why we want to keep the stop a little bit higher. Yeah, we lose percentage of gain, but we ensure that we're not going to get stopped out as likely. So the pip size just determines the size of price movement, okay? But the percentage of risk is still 1%. So this, let me actually show you with a trade. Let's do paper trading. Let's look at paper trading, okay? So I can't actually do this live because it's an old area, but we would do sell Euro USD. And then what you do is you'd use your cursor here and you'd say, okay, I think I would need my stop loss in this area. So it's 17294. All right, so we could do that. That's 26 pips. You can set a take profit. That doesn't really matter right now. But what is important is this right here. So the percentage of risk. Set this to 1%. And then notice the, if I change this, let's say I change this to 4. You'll notice that the position size, the quantity, changes, okay? So you also notice that, so 2.8% profit would be $3,000. If I change it to 4, 2% profit. So what's changing here is that if I have to make my stop bigger, because I'm maintaining a 1% loss, that I will not lose over 1% of my account. To do that, it lowers the position that I'm putting into the market. So it lowers the quantity that I'm trading. So we don't change our margin. So I don't change the margin value or margin percentage. What it changes is the quantity I'm trading, okay? So I'm trading 473,810 units of Euro USD. And that's why if I can keep the stop, 25 to 30 pips, usually 30 pip stop, it's better. For instance, so 30 pip stop, 2.5% profit at 75 pips. If I change this, if I have to do 75 pips stop loss, At 1%, it invalidates me being able to take that position because we don't do one-to-one trades. We're not going to risk 1% to gain 1%. So hopefully that explains a little bit better how that works. If you have questions about the short long tool, still comment them and I'll try to address them here before we move on. But that's how that works. The easiest way to do this is to use the quantity percent risk, set it to 1 rather than entering the quantity yourself. That way, you're set. You can set I usually set the price for the stop loss. That way I know where it's actually sitting. 17264. That'd be 23 pips. All right, so that gives me a 3% profit. This would be how you'd enter it in real time. Yeah, so I'll just do, let's see, it's a limit order. Yeah, that'll work. So this is how it would look on the chart. And you'll notice that it gives me cushion here. Yeah, it is possible that could wick up and it could happen. That's why this trade, the possibility of this moving up higher is higher than this one. This one is a better trade. But then if you got in here, you have less profit. So you can move this down to here so you don't get accidentally stopped out in profit too soon. That'd be 10%. But that's how that works. Okay, so the profit is based on my position size and my account size, okay? So if you look at, this is a paper trading account that I'm actually, I've been trading, not a new method, but a new, back testing some different things, and I'm trying some different things. So my account balance is 126,981. So 1% of that is $1,200. Okay. So because I'm risking $1,200 and it turns out it's about 500,000 units, the profit percentage, if it makes it down to here, is $12,000. So that's real profit. If I was to make this trade and it was to end up down there, that's real profit. It's exactly real profit. Now, the difference is with paper trading is that you don't have the volatility in the market. Sometimes there's a lot of volatility and, it won't be exact. Okay. For instance, you might have your order set here. It's 17026. You might end up getting caught into this order at 17035. Just because, that's how the markets work. It's not too big of a deal. It's just understanding that it happens. That's why you shouldn't trade right as soon as market opens on Sunday. Give it time. It's one of the reasons anyways. The long short tool does not take the trade. It just gives you something to work off from. For instance, if you're looking at a pattern like this and you're like, well, how much is in that? If I was to, let's say we were here and you're like, well, let's say that I was to get in on this trade and I could do 25 pips. How much is in it if it goes to the top? Well, that's 2.7%. Is it worth taking the trade? It's just something to quickly look at to gauge. And it's also a good, nice visual indicator. Okay, so order quantities. Let's go back to, we'll do modify order. So quantities. That's the quantity of the unit. So we're trading euro. So that's 533,534 euros. If you're trading Japanese yen or whatever, that would be Japanese yen. So the exchange rate will play into profit. Some pairs, the exchange rate is better, so you're going to make more profit per pip. But the quantity, that's the quantity you're able to trade with margin. At 1% risk of your account, which is $1,200. So Hopefully that answers that question. Let me see. There was a question I want to get to. So do you think Bitcoin could have major flaws that could be found in the coming years when it hits 21 million cap, as in we have new discoveries or advances in blockchain tech at that time? There have been some interesting theories on Bitcoin. As technology advances and computers get smarter, they will actually be able to theoretically, I don't want to call it brute force or whatever, but they could basically manipulate Bitcoin. Possibility. It's not going to happen next year, but it's a possibility to come in the future years. By then, Bitcoin could adapt. They could change things. It's most likely, in my opinion, that if the world is going to adopt a one world or multi-world cryptocurrencies, that it's not going to be Bitcoin. It's going to be something different. That would just be my theory. I think Bitcoin is something that's you could see as a test, but yeah, it definitely is a possibility that as time progresses that they could find new flaws. There are flaws right now. It's just Bitcoin's pretty amazing. I mean, it's pretty hard to believe. Understanding the technology behind Bitcoin, it's pretty hard to believe that some random person came up with Bitcoin. I mean, I'm just going to put that out there. It just seems a little implausible. I think there's probably more people involved in creating Bitcoin than people believe. All right. If you use leverage in your trading, does anything change in the position size? Like, will I be risking more than 1% if I'm using leverage? No, when you set this to 1%, your risk is 1% with leverage. So that's how it works. It's not going to risk more of your account. It's all figured out for you based on... So we're trading on a Wanda. So it sets the margin in that percentage. It's in that percentage. So 533,000 units, 1%. It figures it all in for you. US 10Y influence on the DXY for better forecast. I'll try to get to that in a minute. So considering the majority of news in crypto space is positive, isn't the lack of volume in Bitcoin a sign of weakness with the immediate short-term uptrend? I would definitely agree with that statement for the most part. Bitcoin is... I believe Bitcoin's kind of at a pivotal point right now. And because we're not seeing an influx of money into Bitcoin, it's just not happening. And because we aren't seeing the real volume, it does lead me to believe that we are going to see more downside. Even if we move to the upside first, I do believe we'll see more downside. We're not seeing that bullish momentum. Basically, that you would need to see from the retail investors, in my opinion. The other thing is, too, is until the issues with the corruption and manipulation are addressed, the big money's not coming in. So that could change everything. If those issues were addressed and fixed and Bitcoin was fully regulated like, Euro USD, then you might see a huge amount of volume just pour into Bitcoin. And the great thing about that is it really doesn't matter if Bitcoin goes to 10,000 or 20,000 or 15,000 or 50,000. If you see a huge amount of volume come in and it's regulated and there's not this corruption and tether garbage, you're going to be able to make tons of money trading Bitcoin, whether it trades between $1,000 and $3,000 or $6,000 and $20,000. It doesn't matter. That doesn't matter at all. It just matters if you got the consistent volume. So, so that's, I better close this out. All right. The other thing I just thought of, I'll mention it. Awanda works really well with closing positions together. So closing your position, your stop, and your take profit together. Forex.com, in my opinion, is a little fickle with how they handle that. So if you're trading on Forex.com, just make sure when you close a position that you close the stop loss, and the take profit. Otherwise, you can get tagged in on your stop loss, and it's just really ridiculous. So if you're on Forex.com, keep a note of that. All right, so that's Euro USD. We're looking for that to move to the upside. It'd be nice to see this either move a little bit impulsively and then correct along the trend line. That would be a beautiful area to get in. I would love to see that. But again, as we talked with DXY, it could move to the bottom first. Let's look at Euro Yen. So which exchange for Bitcoin? Just use the exchange that you trade on, basically. The reason why I use XBT, which is BitMEX, is because I found it, if they're involved in manipulation, which I believe they are, I think it's interesting to watch that chart. I do watch Bitfinex as well. I was watching Coinbase. I don't as much. It's pretty much Bitfinex and BitMEX. But yeah, if you're trading on Bitfinex or Coinbase, use those charts. That's basically how you should do it. There will be some differences, so depending on what's going on. But mainly you want to stick with the chart you're trading on. So for Euro Yen, we're looking at, this is a descending channel. We saw this move to the upside very impulsively. So impulsive, we saw this. It's a sloppy correction, impulse, sloppy correction, but still we got that impulse. Moves to the upside. You'll notice that we have 1, 2, 3, and then 4 touches. We could count this as a fifth, which seems to make sense to me. That'd be 5 touches. So at this area, we should have been expecting this to turn around. However, if you'd got in on that trade, you most likely would have been tagged out for break even, because we did come back up. And then we made this arcing motion, which is also a reversal sign as well. So we came into this corrective movement. We have a descending within a descending. I'm looking for this to move to the upside. I'm just looking for confirmation of that. If this breaks impulsively without me right now, I'm just going to wait for that correction, that continuation pattern, to tell me it's going to continue. But what I prefer is to see that movement along here and then go. That would be great. I would definitely be in on that trade. So that's Euro Yen. It's keeping it pretty simple. If you look at the daily on Euro Yen, we are looking for the possibility for downside. So it's important to keep that in the back of your head as a possibility that will happen eventually here. But in the meantime, there is the possibility for this to make a movement back to the top here. And if we were to able to get in, let's say we got in on a trade, let's say this corrects along here, we see a indication, a turnaround point to place an entry. If we were to see that, we could get in on this. I would keep my stop at right around 30 pips. It's going to be close to this double bottom, which is a possibility for that to move. If you want to be real conservative, you might go a little lower, do maybe 35. If we were to stick to 35 pips, and this takes off, we still have about 10% in that move. If it goes all the way to the top, it might not. It might only go to this, what we'd say, it's a quadruple top right now. So that's a possibility. That'd be 6% right there. So that's at 35 pips. If you wanted to be a little bit more conservative, you get 40 pips, and that's 5%. I wouldn't go too much more than that. And I wouldn't go too much tighter than 25 pips because, again, there's always the potential for this to move correctively, break that trend line, and still go for the top. So you don't want to get tagged in and tagged right back out. So keep your stop at 35 for this one. If that plays out like this, obviously it's going to change depending on how this pattern develops. But that could be 5 to 6% for that pattern. Even for this, which would be my first target, would be 4% or 4.5%. So that's still a good trade. It's something to look at as a possibility for Euro Yen. I love Euro Yen. I'm going to jinx myself by saying this, but Euro Yen is one pair I've never actually lost a trade on. Like, absolutely never actually lost a trade. Every trade I've taken for Euro Yen has been a good trade for me. I might have taken a couple break evens on Euro Yen, but I've never actually lost money on Euro Yen. It's one of my favorite pairs. And this varies for each person. Everyone has their favorite pair. So, I know people that love USD CAD just because it's very impulsive and you can bank 15-20% on a really nice move. So, all right. We are focusing on Forex right now. In a few minutes, we're going to go into QA. We can talk about crypto. We can talk about Forex, whatever anyone wants to talk about. I will tell you this, that while cryptocurrency is dealing with regulation issues, you can make money with it, and you should as much as you can. But if you have the opportunity and you have the interest in trading, get involved in Forex, even if it's just paper trading. Because you're going to get the experience. You're going to get the time under, the charts in Forex that you're just not going to get in cryptocurrency because, you have Bitcoin and Litecoin and Ripple and Ethereum that are all basically moving very similarly. There's a little bit of nuance there, but you just have so many charts for Forex that it just gives you so much opportunity to learn. So I would encourage those of you who are not in Forex to, give it a chance. All right. So that's Euro Yen. Let's see here. USD Yen. Let's look at USD Yen. All right. So on the hourly, let's go to daily first to get the bigger picture on the USD Yen. So we had this impulsive movement, correction, and then we had this flag, and we broke, but it's still quite corrective. It's definitely not as impulsive as we've seen in the past. We're at this double top area, so it's a point we're looking at to react off from. If we react off from that point, we could be coming to the downside in a big way. So that's something that we got to keep an eye on. But on the hourly, here is the potential. So an ascending channel. Within that ascending channel at the end here, we have this descending pattern. Now you'd say, well, isn't there a possibility that this will break to the upside? Absolutely, it's a possibility. But we have to keep in mind that we have 3 touches. So the most probable thing to happen is for this bigger pattern to play out. So to see this break to the downside would not be something outlandish, okay? However, that being said, we could break to the downside. We could get the corrective movement like this, and it could continue. Or we could break to the downside correctively, and we could just have this descending corrective movement and then see that come to the upside. So it's important to kind of visualize this in the back of your head as possibilities. The other possibility is definitely, it's a possibility for this to break. I'm seeing it as a little bit of a lower possibility. If this does break, I would anticipate it breaking above this double top and then retracing. If we see that happen and we see the retrace, I would get in on that retrace. It's a huge probability from that retrace of us moving to the downside from there. If that happens, if you'll notice, let's see, zoom in here a little bit. You'll notice we could come up to even this area to retouch that trend line. It doesn't have to happen, but if it does, just don't let it put you off. A lot of people get put off by trades. They're like, well, it broke the trend line, it broke resistance. Now it's support. That's bogus. It's totally bogus. That's not how the markets move. Markets move in patterns. So if it breaks a resistance or support area, but it's fulfilling a pattern, this is a ascending pattern, we're still expecting that pattern to break to the downside unless it gives us an indication of something different. For instance, this is descending in nature. If this just corrects out descending, then we're definitely saying, okay, this is changing. We're going back up. So don't let these things put you off. Just, write these things down in a notebook and be like, okay, this, when you have a descending pattern at the end of a bigger ascending pattern that has 3 touches, the chances of that playing out to the upside is lower. Not out of the books. Totally could happen. Totally could happen. If it's going to happen, most likely, because we're at this trend line, we'd like to see that corrective movement along the trend line. Or just break it and then along the top. If we break it along the top, that's even a higher probability of it moving to the upside. So, XRP, we did talk about XRP. It has made some really nice moves for trading. It's probably one of the better pairs for making money, as far as I'm concerned. Yeah, right now it's developing a bigger pattern, so keep an eye on it. But it's totally, there's good money to be made in XRP. All right, I can look at Microsoft. I find that interesting because I haven't actually looked at it, so it'd be something different that I haven't looked at. XRP is moving right now. All right. Be interesting to see what happens from here. So we'll keep an eye on that one. All right, so that's USD yen. Let's look at British pound USD. So British pound USD, we're in this larger ascending channel. We don't really have a good top trend line. We could move it down like this, but that just kind of fulfills this area. So I'm keeping it right there in that area right now. So ascending pattern, we had this impulsive movement, we had this correction, so that would have been a great opportunity to get in. This is actually a good opportunity for me to show you a entry on a bigger pattern. Okay, so let's do this. So we have this correction, and then it forms a bigger correction. So we get 1, 2. We could consider that third. Definitely would consider this a third touch. So if you'd waited to this area, you would have got in on this candle because it's a retrace candle. We'd have to keep our stop loss at around 40 pips at that area. That gives us basically 2% or 3.5% profit just down to this area before it retraces. If we'd stayed in, which because of this candle you might not have, you would get 6%. But definitely, even if it was just 3.5%, it's not bad. So you could have got in on that one. Most likely, you wouldn't have. Most likely, you would have got in on this one. So you would see that test the trend line. You see that small retrace candle. It's still a retrace candle. So you would have got in on that. The problem is you want to know this wick would happen, and you might try to keep your stop loss smaller, and you would have got tagged in and tagged out. So that's one of the things you don't always know. However, that being said, let's say that we had a lower stop loss, about 30%, and it comes down to here. You're not in quite 1%. Then it completely retraces. Let me move this over here. It completely retraces. I would have had this set as a break even at this point. Probably. I probably would have had that set as a break even. Just in case we moved back up, I wouldn't get taken out for 1%. So it depends on your tolerance level, but you could totally get stopped out at 1% for no reason when you could have had that in break even. So those are just points to really consider. And I know that I've shared a lot of different little tips, and probably some of you completely missed them just because they seemed too simple. But I mean, you add these little points up and they totally make the difference. I mean, it can make the difference between having a break-even month or even a loss in a month to doing 4, 5, 6, 10% profit. It makes a huge difference. A huge difference. So I encourage you. I know that the live stream is going to be around 2 hours when we finish, and I'm going to try and keep them at 1.5 hours in the future, but honestly, rewatch it, because this is information I wish I had when I started trading Forex. I really wish I had. It would been power. So anyways, I got a little sidetracked there. So impulsive movement, we have our correction. This is still could be considered impulsive. A lot of it is still corrective, but whether you consider that impulsive or you just say, okay, it's a corrective descending channel, it does break to the upside. We get this flag pattern, which would be a great opportunity to get in. If you had gotten in on that pattern, because it broke the trend line, the probability of this continuing is really high. It's much higher. So we get a second touch, we get this retrace candle. Most likely you would be getting in somewhere there just because that candle happened really quickly and went quite impulsively. We could get into this trade at, let's see, we'd want to keep it at 45 pips because of that wick. It's 1.6% profit right now, but the potential is 3.7% for the first area, 5.5%, and then possibly even a little bit more. So the potential's there. Will it totally make it all the way up there? You don't know, but it's the possibilities. It's just understanding that I'm okay taking a trade that it's only 1.6% profit right now because I know that the potential is much greater. 1.6%, it's not a trade that I would take if I knew it was going to be just 1.6. But if you're cashing in profit, even if you cash in at 1.6, it's still decent. But right now it looks like we are developing possibly a correction. That's what I would like to see happen. If we impulse without that correction, it might be short-lived. So if we get that correction, it'd be another entry opportunity, and we should see some good impulsive movement on that. If that happens, we are definitely going to end up either breaking this area or testing it, and then we'll see what happens from there. So they are definitely these areas where you can, even if you don't get in on these trades, which is that would be the best area, because it's double bottom, it's the third touch. That would be a awesome trade. You got the scale-ins, the continuation pattern. So you don't have to miss out on the market. Let's say you did get in on this trade. You waited for it to give you that indication, and you got in at, see, right around 30 pip. That would be almost 6%. So definitely, you're like, that's a trade you want to get. You want to get that trade, not this trade or this trade. But don't let that mentality scare you. It's better to get this trade or this trade than not to get a trade. So don't get caught up in like, I missed the best trade. That could have been 10%. Now it's only 2 or 3. Don't let that mentality get you. That kind of fear of missing out will ruin you. So be careful with that mentality. It's actually Slack, not Discord. But the group is for those who are part of the course. The reason being is that we want to focus on people who are showing a definite interest by buying the course. So The course is right now one-time fee. If you buy it, you get access to Slack. As the community grows, we are going to switch to monthly. It's going to be a monthly fee to access Slack. The live streams will most likely go to a monthly fee. With that, it'll be just one bundle. The reason is that we want to focus on quality, not quantity. So we don't want to just have 10,000 people in the Slack group. We want quality people that, in 2, 3, 4, 5 years, we have a group of, maybe 20 or 50 people that are killing it in Forex. And, we could literally start a trading floor if we wanted to. Whether that'll happen or not, who knows? But, just that kind of mentality. We want quality. All right, super large wicks on candles on BTC over the last 4 to 5 weeks. All right, so going back to this briefly, we'll discuss it. This does look like it's starting to correct, which if we get, 4 to 6 hours of that, there's a possibility this is definitely going to move up, another 100 or so bucks to test this line. So these large wicks, a lot of this, unfortunately, as far as I'm concerned, is manipulation. It's wash trading that moves these moves. I think that's a lot of what this is. The other thing is that, when you get a move of $100 or so, you get these tests of these trend lines. You'll notice a lot of these moves lately, it tests and then it retraces huge. You just get the wick. It's like it retraces huge. Part of the reason for that is, again, probably wash trading, them selling off to make a profit. The other part is retail traders selling. So, you have retail traders that don't trade this method. They might trade, like more of a swing method or lower time frame charts. Like they might buy in here. And so they're going to want to get out rather quickly. So if they see $100 profit, that's like huge. They're definitely going to sell out and get out. And if you have a bunch of people selling out in these areas, or maybe they're reacting to moving averages or whatever, and people are seeing that and they're selling out, it'll push the price down. So whether it's retail traders cashing out on profits or it's wash trading in Bitfinex and BitMEX cashing out for profit, those are my opinions. It is interesting that Bitfinex has lost their bank, whether they lost it or, whatever happened with that. It's a little fishy. Also corresponding, and I'll just show you this quickly. Kraken. This was very interesting to me. So USD dropped from where it's consistently been overall, 98 to 99 cents to 94 cents. There was a study that they did, and I'm going to do this quickly, but there was a study they did, and they found that no matter how much Tether was moving around or being traded, it didn't affect the price of Tether, the dollar to Tether price, really at all. Suddenly you have very little Tether being traded, and then you have these big moves. So what happened here is that you want to call them big wigs or whales or Bitfinex themselves, somebody in the top was cashing out their Tether for real fiat. That's what happened here. If we see this happen again, I would say these are definite warning signs of the possibility of Tether collapse. Maybe it won't happen for another year, but if it happens next month, and you look back and I should have seen that. At least it's a warning for you to pay attention to. So, all right. Can Aussie USD fall further below major trend line is broken? Seems like a bear flag. Let's look at Aussie USD. I think actually, let me see if that's on my dark horse list. Yeah, it is actually on my dark horse list. Okay, cool. So this is one that I'm looking at as a possibility to trade, but it's not really ripe yet. But it could pan out this week, but it may not. So this is what I'm looking at for the daily. On my end, I'm not seeing where it has broken the trend line. This is the trend line that I have for the daily. If we look at the hourly, we had the ascending, and now we're in a descending channel, but it's quite impulsive. But we're noticing we're starting to get this corrective movement like this. Now, several possibilities can obviously happen from here. We could get a move like this, and then it would form just a larger bear flag, and it would sell. I would anticipate the possibility of this making it to the trend line quite high, but it definitely doesn't have to. It might just correct down to the trend line. If it does, I'd be looking at entries to buy this. But yeah, I mean, it's made some really nice moves, and there is potential for it to make more movement down, to retest this area, but I don't really see it as a selling opportunity right now. So the daily, it is a descending channel. We're almost to that outer edge. On the hourly, we are in a descending movement to retest that area. We're looking for buys on Aussie USD. So this is why it's in my dark horse list, because it's not set up yet, in my opinion. It's going to take, might take a few days here. But if this does set up like that, I'm going to take a shot at it, because the reason is that, let me do the there we go, long. So let's say that we got in here, probably, I'm going to say it's going to be around 35 pips, just because I'm anticipating that. To the top of this pattern, which is highly likely a 6%. To the beginning of this correction, let's see, is almost 10%. And if you look on the daily here, there's the possibility of it making it up to here, which is 20%. Obviously, if it does, it's going to give us corrections. It's going to have large corrections, so you may not be in it the whole time. But this is going to be a big move. I mean, even if you just get 4 or 5% out of it, it's going to be a big move. But Aussie USD, definitely not looking for a short opportunity at this time. I'm just seeing upward potential, but I would expect that to take a few days to play out if it's going to this week. I would not anticipate it breaking the trend line. Let me see on the 4 hour. Yeah, I don't see any reason to believe it would break the trend line. It's possible it could break the trend line, catch people on the wrong side, and then move to the upside, but most likely it's going to react off from that trend line. So that's what I'd be looking at. All right, we are really close to 2 hours here. I'm going to just open up for questions. If you have questions, put them in the chat, and I will try to answer as many as I can in the next few minutes before we close this out. As far as holding a position open, I'm not aware of a platform, and for Forex anyways, that charges 2% interest. There are fees associated with holding a position open past trading hours, but it generally, past close a day, it generally is not that big a deal. I mean, if you're in profit, you're in profit. You shouldn't be holding positions in loss for days. I mean, there's probably an issue with your trading strategy if you are. I mean, there might be a time, it's going to be rare though. I would say that there's an issue. Microsoft. Let's look at Microsoft. Let's see, Microsoft Corporation. Let's do that. All right, I haven't looked at Microsoft. I mean, I may have like a long time ago. So this is the weekly, very impulsive. Basically since 2009, but since 2016, it's been very impulsive. So not much we're going to get from the weekly chart. Let's see what is looking like it's taken place here. So we have ascending. The problem is here, and this is the thing you're going to have to pay attention to with a stock like this, is when you've had a parabolic move like Microsoft, where you really aren't seeing those huge corrections on the daily, there's not as much to go off from. For instance, when we're looking at Forex, and we can say, well, the previous high over here, and we have a descending and then an ascending channel, and it gives us areas of reference. But this has been very parabolic. So even though this is ascending, and we would expect an ascending to break to the downside, we also have to keep in mind it's been parabolic, and we haven't really seen it make those big downward movements. So when it does, it's probably going to be a decent move. But you know, it's something to keep in mind. You don't have the history of saying, okay, it's done this, this, and this. So Microsoft would be interesting. But let's look at the hourly and see if there's anything on the hourly to take a look at. So 1, 2, 3, 4. So I'd be looking at that. And that area. So that's what I'd be looking at. Ascending within an ascending, but again, it's parabolic. So if I was going to make an entry on this, I would want a good indication to get in. I would be looking at, I think I'd probably be looking at other stocks that aren't so parabolic, because like Bitcoin, when Microsoft does dip, it's probably going to take a pretty good dip, I would say. But all right, any other questions before we close this out? Please, DXY. Okay, DXY US 10Y. The correlation, I really let's take a look at it. So the daily here. It's one of those things that I really want. If you have, I guess the point I'm trying to make is, if you have the DXY and you think that the US 10Y is following it or is similar, then I guess the question I have is, why would you spend time on trying to find correlation unless you believe that it's going to give you an upper hand or an indication before the DXY to make a trade on like Euro USD? I don't know if that was maybe something you were thinking, or if I missed what your point is. But if we look at something like that, when people sell bonds, the DXY goes down. Right? Yeah. No, I can understand that philosophy. Again, you kind of have the invert correlation. Okay, so we have a third touch on that. Let's see. And it looks like that is ascending with ascending. It'd be something to keep an eye on. You have that movement that moves out. It's kind of interesting because you get a lot of this corrective movement instead of impulse. Kind of interesting. But that's definitely got an ascending nature to it and ascending area. But if it's U.S. bonds, I'd be curious. I can't say really. I haven't at all back tested U.S. bonds, so I can't really say if it plays out with a consistency like a Forex pair. I'm just kind of curious. Yeah. I mean, I think it's a possibility that it could give you an indication if you saw big impulsive movement. I don't know. I'd have to spend more time actually looking for correlation with it, but looks like something interesting to watch anyway. So thanks for bringing that up. Let's see. One question I would have on BTC is the daily. It looks like a bit more bullish, but on the hourly, it looks more bullish. Bearish but bullish. How does one properly interpret that? On hourly, you can anticipate the breakout to the upside, but at the same time, the daily, those impulses up are nothing more than gradual upward incline. Yeah, I mean, the thing is, whether it's Bitcoin or Forex, the thing to keep in mind is the override. So if this is going to break out, we're going to see movement along the trend line most likely. Some sort of pattern telling us that we're going to break. Just makes sense. So we're not there yet. And because we're not there yet, we can look at the hourly and make trades on the hourly and be okay. If we were sitting at the trend line with this ascending channel, the bigger daily could definitely play out and override any hourly pattern. So that's what you kind of have to keep in mind. That could happen. It's less likely to happen when you're inside the pattern. It's more likely to happen when you're at the bigger pattern. So if that's going to happen, like for instance, if we were to get up to the top area here and let's say that we were to do something like this. You might say, okay, well, that's a reversal pattern. It's ascending or maybe even a steeper ascending, okay? But what if what we're doing is, let's see, we're breaking this high, or maybe even we break that high, and then we still drop. That's a possibility, but also it's a possibility that we get that buy from here and it just goes. So the override is always the bigger time frame, but it's understanding that within the bigger time frame, you're going to see the hourly play out consistently throughout. It just, once you get to confirmation of the pattern, let's see if I can actually find an example. This is actually a decent example. It's not the best, but it's a decent one. So we had this impulsive move, and then you could say, well, this is a bull flag to continue higher, right? Makes total sense. But we're at the outside of the bigger pattern, and it's understanding as well that where have we come from? We've had impulse, correction, impulse, correction. You could even say this is an impulse. In correction, then you have impulse. So we're at the point in the market where if it's going to reverse or change direction or develop something bigger, it's going to do it. And even though this does look like a bull flag, and we do have that retracement candle, we could get in on it. As this reverses, you'd be taking a break even. So you would definitely not be taking a loss on that. I wouldn't. And then as this develops out like this, you'd be like, okay, this is doing something different. There wasn't really any indications on this pattern to take a buy. And then we get that, it's not a huge curve, but that curve that indicates it is changing directions. So, yeah, when you're looking at patterns, definitely keep an eye on the daily, the weekly, definitely understand what the bigger pattern is doing, but it doesn't mean that the hourly or even, the lower time frames are not going to play out. Thanks for coming on board, Daniel. If you had to speculate how much of the support for above 6,000 Bitcoin is coming from funds like Pantera Capital and Galaxy trying to stay alive, that's something I really don't have an answer for. I really couldn't speculate on that accurately. I'm sorry. Do you see the fall through Christmas bump happening again, or more consolidation? Show your work. Thanks for great stuff. I'm going to have more of an opinion on Christmas as we get closer to November. Because I think by then we're going to figure out whether we're breaking through this pattern or developing something bigger. We'll have more clarity going into November about December and going into the new year, I think. But it's hard to give an actual answer to that right now. But all right, we are over 2 hours, so I would like to close this up. If there's anything that I missed, if you had a question that I have missed throughout, you want to drop it quickly, I'll try and answer it quickly. Okay, so indicators have a consistent excuse me. So actually I have my trend lines messed up here. But anyways, the issue we have with with indicators is that indicators are based on historical price action. So they're based on past. And while we can glean information from the past does not predict the future. So because, like moving averages, there's so many moving averages now. You have the 5-day and the 10-day and the 100-day and the 50-day and the 20-day and the 200-day and the 300-day and the 400-day and the 7-day and there's so many that price action is going to appear to react to those. And depending on the chart you're trading, sometimes it can be quite accurate, depending on whether, what the market is, how the market is moving. It can even be profitable, but it's not going to be consistent over 5 years. It's just not going to. This has been proven. There's been people who have lost their whole account because they traded moving averages and other indicators, and suddenly they just went from being profitable to not. RSI is the only indicator that we actually recommend that has potential, and that is mostly for the divergences, but it does actually, statistically, you can make a profit trading RSI, but there's no indicator that's going to tell you where the market is going to go on a consistent basis, and if you use indicators, it's going to clutter your chart and confuse you. That's why we are so consistent in being able to predict so many moves. We don't get them all, but we get a lot of them because we ignore a lot of the noise that a lot of people are focusing on. And we just focus on what the chart is doing. So when you understand that charts move in patterns and they move based on structure, then you don't need indicators. Charts don't move based on indicators. So yeah, I would keep an eye on how things develop with Tether and everything. So don't keep your money in Tether. But Bitcoin breakout, it could break out from here. It is a possibility. We would need to see a confirmation of that and a correction, a flag to move higher. Yeah, I mean, it's up to personal preference. If you want to use indicators, I mean, that's totally cool. Nobody, that's not an issue. It's just personally what we found to be most successful is just to get them off the chart. It just makes the market, the clarity of the market is just so much better for us personally. I know that there's some people that love them and they have specific ones they like. You know, if that's how you trade, that's not an issue. I don't have an issue with that at all. So, all right, guys, this is, I'm going to have to wrap this up here. I hope you enjoyed the live stream. We've mentioned this before, but we are going to cut the live stream in two. We're going to do a crypto live stream and a Forex live stream. It's going to happen. We just give us more time to work that out. And but that's going to happen. Probably Forex will be midweek or maybe Monday. We'll see. We'll see how it goes. But good luck in your trading. Focus on the technique. Focus on putting the time into the chart. If you haven't joined the course yet and you have the opportunity, I would encourage you to at least take a look at it and give it a chance. If this is something you want to do, if it's just a hobby to you, then definitely you'll get all you need from our videos. But if you want to take it to the next level and you really want to make trading your career, you really love it, then I would encourage you to take a look at the course. Again, it's not just a marketing gimmick here. We are going to have to shut down or we're going to change the structure of how we sell the course and the Slack group. So it will switch to monthly eventually. So if you've been listening to us for a little while, you like what we offer, I would encourage you to get in now. The course will never be cheaper, but eventually it might go up. So thanks so much for all your support. If you have questions, you can continue to submit them if you're in Slack, to Slack, on Twitter, via bitrage.com. We love hearing from you guys. We love the feedback. And it's been great hearing about you guys and the trades you're taking. Some of you guys are making some really good returns, and that is exciting. Look forward to seeing you again next week, and look forward to hearing your success stories. Thanks so much for watching. Have a great one, guys.